Guarantees are given by a bank on behalf of its customer regarding specific performance obligation by the customer to the other party. The guarantees ensure payment to the party with whom the bank's customer is doing business. Under a bank guarantee, a surety bond arrangement, the bank acts as a guarantor of a claim or obligation in the lieu of the debtor. The bank cannot be held liable in the event that the bank and the debtor fails to perform. The bank obligation is limited to its pledge to pay a maximum specified amount on fulfillment of the terms of the commitment. A bank guarantee surety bond may only be issued if the customer has been granted a line of credit. In certain cases, the bank may require the educate collateral. One may note that even though both letter of credit and bank guarantee ensure that the issuing bank guarantees payment, the difference lies in the fact that while LC is a positive action instrument or a BG is a non-performance instrument, hence payment is released under LC as when all the terms of the underlying trade transactions are met. On the other hand, payment is released under BG if the terms of the underlying transaction are not complied with. Types of bank guarantees: direct guarantee or indirect guarantee. A direct guarantee occurs when the client instructs the bank to issue a guarantee directly in the favor of a beneficiary. Indirect guarantee: when an indirect guarantee, a second bank is involved. The second bank is usually a foreign bank with head office in the beneficiary countries of domicile, is requested by the initiating bank to issue a guarantee in the return for the latter's counter liability and the counter guarantee. In this case, the initiating bank will cover the guaranteeing foreign bank against the risk of any losses that it may occur in the event that a claim is made under a guarantee. It formally pledges to pay the amount claimed under guarantee upon first demand by the guarantoring bank. Depending on the purpose of guarantee, the bank guarantee may be classified as under tender bond. This type of bank guarantee is also known as a bid bond. The purpose of a tender bond is to prevent a company from submitting a tender, winning the contract, and then declining to accept it on the grounds that the deal is no longer lucrative. Tender bond offers buyer's security against dubious or unqualified bids. These are often mandatory for public invitation to tender. Performance bond. This is also known as a performance guarantee. A performance bond or a guarantee provides security for any cost that may be incurred by the bond beneficiary on non-performance of contractually agreed service and or non-compliance with contractual deadline. Credit guarantee. Borrowers are often required to provide a collateral for a credit line or a loan. A third party may also provide a collateral. A bank guarantee is one of the options. Creditors have to ensure that a loan will be repaid on the condition that the lending and the guaranteeing banks are not identical. Payment guarantee. A payment guarantee or a payment default guarantee provides security against default for the goods to be delivered. For example, if the debtor fails to make payment when due, the beneficiary has fulfilled his or her contractual obligation. Example: goods have been delivered or service have been provided in the accordance with the contract. A written declaration to his effect is generally sufficient to redeem the payment from the guaranteeing bank. This instrument can be used instead of a letter of credit if, for example, the buyer does not require or demand proof of delivery by means of the usual original delivery documents. Confirmed payment order. This is an irrevocable obligation on the part of the bank to pay a specified sum at a specified time to the beneficiary, means creditor, on behalf of the customer. Advance payment guarantee. The advance payment guarantee is intended to bind the supplier to use the advance payment for the purpose stated in the contract between the buyer and the supplier. An advance payment provides the supplier with funds to purchase equipment or components, for example, or to make other preparations. In general, the advance payment guarantee should contain a reduction clause that automatically reduces the amount in proportion to the value of partial deliveries. The advance payment guarantee should only become effective once the advance payment has been received. Mobilization advance guarantee. When projects are awarded to companies, the latter required release of some amount in advance so that they can mobilize resources. Such amounts are released against bank guarantee known as mobilization advance guarantee. As the contract is executed, the advance is set off by progressive payments and the amount of the guarantee also decrease over time. BL letter of indemnity. This is also called a letter of indemnity. Individual bill of lading or the full set can go missing or be held up in the mail. Carriers may be liable for the damages if they deliver the consignment before receiving the original bill of lading. A bank guarantee in the carrier favor for 100 to 200% of the value of the goods enable them to deliver the goods to the consignee without the presentation of the original documents. Rental guarantee. This is a guarantee of payment under a rental contract. The guarantee is either limited to rental payments only or includes all payments due under the rental contract. Example, including cost of repairs on termination of the rental contract. Credit card guarantee. In certain circumstances, credit card company will not issue a high value credit card without a bank guarantee. Such kind of guarantee extended by a bank is known as a credit card guarantee.